Hey, good morning, Eric. Welcome to the podcast.
Thank you, Dave. It's a pleasure to be here. It's an honor. Thank you.
Well, the pleasure is all mine. So, where are you connecting from today? What part of the world are you in at the moment?
The great state of Texas. I'm in the Houston area, born and raised a Texan, been all over the world, but this is home.
Oh, that's awesome. In fact, I think you even stayed close for college, right?
I did. I'm a Cougar Cougar alumni, so a proud Houston native.
Awesome. So, I'm really excited to have you on. You are with the Export-Import Bank of the United States, correct?
Correct. We
So,
also
tell
go
me a
by
bit.
yeah,
I'm
we also
sorry,
go by EXIM Bank. Sorry,
EXIM, the
EXIM. Yep.
acronym. Yep. So tell me about XM. Tell me about the kind of the history of the organization and why it exists, and then we'll see where the conversation goes.
Yeah, no, it's a good question. So I'm biased, of course, working here, but I think it's one of the most fascinating government agencies that exist. We're set up in the executive branch of the federal government. We've been around for 90 years. Most people haven't heard of us, but
Okay.
we are small. We've got anywhere between 400 and 500 people as a part of the agency. Most are headquartered in Washington, D.C., but we do have a dozen regional offices scattered throughout the U.S. and all the major cities. I cover the Houston office. And in doing so, I work with exporters in the great state of Texas and help them export more U.S. made products and services. That's really what we're about here at XM Bank is supporting our U.S. companies that are exporting a U.S. made good or service. We're on the finance side of that help. There's other
Mhm.
government agencies throughout the whole process of a transaction, whether it's finding buyers, whether it's financing a transaction, or even getting grant money to help you export. There's other support, but EXIM is specific on the finance piece.
Okay.
Um,
And so does XM, at the end of the day, does this cost taxpayers, billions of dollars to have this thing in place or?
yeah, that's another good question. So, we're one of the few agencies historically that have actually uh, built a surplus of money for the taxpayer. In other words, we're using less than we're making, and we send money back to Treasury. It changes year to year, but historically, if you look over the past, 20, 30 years, we're generating a surplus and sending that back to Treasury. So, costing taxpayers billions of dollars, no. We like to operate a little differently than a government agency. We are an independent government agency, which means we're not inside a cabinet, but we are set up in the executive branch. And we like to say we run at the speed of business.
Okay.
Internally, we're very efficient, we're very effective, and we're very aggressive trying to reach out to U.S. companies and get them involved in helping them.
Well, that is awesome. I think it sounds like just a win-win-win, right? It's a win for the taxpayers. It's actually a profit center, if you will, for the taxpayers. It's good for the exporters. It's good for the country. Uh, am I correct? I think the only other government agency I've ever heard of that's a profit center is like the Patent and Trademark Office. Have you heard that too?
I think you're right. Now, I haven't researched that myself, just in passing in conversations, I've heard of the same, and there might be one or two others out there, but yeah, it's an unusual feat of a government agency to kind of generate that surplus for a taxpayer and send it back to Treasury. We do charge, fees, and that's how the agency itself brings in money. We charge fees for our different products, we have products like export credit insurance to just kind of dive into what we do
Yeah,
in
let's do that.
export credit insurance. So let me take a couple steps back. When an exporter engages in international business, when they find a foreign buyer in a country and they say, "Hey, here's what I sell," whether it's a product or service, there's always a sticking point, if you will, in the negotiations when it comes to money flow. And what I mean by that is the exporter will say, "Hey, I'll ship my product or I'll do the service, but go ahead and wire me money before I ship it." And then the importer, the buyer, there's always a reluctance there. Well, I don't want to wire you money because what if
Right.
you close your doors? I never hear from you again. So when there's a new relationship and there's a transaction that's trying to occur, money, the movement of money is always a sticking point. Who sends it first?
Mhm.
And exporters lose a lot of deals because of this. I speak to exporters on a daily basis, and every week there's at least one that says, I wish I would have known about this. It would have helped me with, the last negotiation I had with a foreign buyer who said, ship me the product on open account and I'll pay you 60 days later. I wasn't comfortable with that as an exporter, so I closed the door and lost the deal. So EXIM gets involved and we say, no, go ahead and, if they're asking for credit terms, go ahead and provide that to them and we will back you up on the payment. We will insure that receivable from default. So if something goes wrong and the foreign buyer doesn't pay back the exporter as intended, we will insure it. They put a claim into us. So when I say claim, just like any other insurance policy, right? You're
Mhm.
driving
Mhm.
a car and you get to an accident, you file a claim. Something goes wrong with the house, you file a claim with the home insurance provider. We're no different. We're an insurance provider on foreign receivables. And the government gets involved in this space because, David, look at the trade deficit last year. We're nearing $1 trillion.
Mhm.
Most years from year to year in the last 10 years, it's getting worse and worse and worse. So what I mean by that is we're bringing in way more than we're sending out.
Mhm.
And what we have found through our research as a government agency is the number one reason more US companies are not sending more product abroad is the number one reason is fear. They are fearful of what that process looks like. And the government gets involved and we say, let's take away that fear. We'll put the risk on our shoulders as it relates to credit insurance. Go ahead and give your foreign buyer terms or open account. We'll shoulder the risk. And if they don't pay you, we'll pay you. And we want to help the trade deficit. We want to, as a government agency, we want to stimulate US manufacturing. We want to create jobs through exports. That's really what the mission is here at EXIM Bank.
Okay. Yeah, no, that's really good. And do you specifically underwrite each customer, each foreign customer, or is there just you guys just use some general parameters?
Yeah, no, it's a good question. Like, what does that process look like? So we have four different credit insurance policies. We can do everything from, hey, we'll underwrite every buyer if you're not comfortable with it, or hey, we'll give you a policy where you can do your own underwriting according to our credit standards, but give you that autonomy inside your company to do it without coming to us every time there's a buyer. So there's different approaches. Most exporters like the autonomy because they can approve a credit right then and there rather than sending us the paperwork and then us process it and then get back to them. So it just depends on timeline. But yeah, we could do either or.
Okay. And does the policy insure 100% of the invoice, or is there a co-insurance piece where the your customer is taking some of the risk?
Yeah, so the coverage will be anywhere from 90 or 95%, depending on which policy. Most of them are in that 95% range, but some of them are in the 90. It just
Okay.
depends. They have the option.
Yeah, so it's enough that as long as the company's got decent margins, right? If their margins greater than 5 or 10%, then their risk is just if a deal goes bad, they didn't make any money on that deal.
That's a fair way of looking at it. Yep.
But they have enough skin in the game that they do want to make a profit on that transaction. They went to all that trouble. So they have a motivation to not, sell to people who, they have serious concerns about their ethics or integrity or ability to pay. Right.
Exactly. Yeah. And that's really what it's all about. Hey, I've got a new relationship and, name a country. They're asking for open account and open account, most people are comfortable with that in the US. They have a recourse in mind.
Mhm.
Hey, if I don't pay, here's the process where I can recoup. But that all goes away when you send it to a foreign country. Like, how do I even get my money
Sure.
if I don't, I'm dealing with a different legal environment, political, currency, culture. I mean, the list goes on and on and on. So that's wherein lies the fear for the exporter. And there's government agencies, both local, state, and federal, uh, all of them. We want to surround the exporter, prop them up, take away the fear, shoulder the risk, and get them comfortable in international business.
Okay. So you'd mentioned the one person you were talking to that said they wish they'd known about XM, because they kind of lost this deal. Do you have another like case study, if you will, or example? And obviously, you don't have to mention the specific company by name, where everything did work out. Kind of a success story where maybe they were not exporting much, but with this credit insurance, it really helped them materially increase their sales. Do you have any examples like that, just to help people further understand?
Oh yeah, we have a whole list of resources on our website. There's a section dedicated to success stories
Okay.
of all the different companies, and we like to diversify the industry and the product. And we've got
Mhm.
you name it, and it's probably up there. One that just immediately comes to mind is a company, and they've been kind of a strong advocate of Exim Bank. They're called Buzzballs, and it's
Okay.
alcohol manufactured here in Texas, in Dallas area. And they were very successful domestically. I mean, you can find these little alcohol glasses basically in any kind of retail store in the US. But as they looked abroad, they wanted to de-risk a lot of their open account with distributors. And really, I think the last I heard, they either doubled or tripled their revenue by focusing on foreign buyers, distributing it to the distributors, the foreign distributors, giving them credit to pay, and in Exim Bank insuring the risk. I mean, it's just one interesting example that, if little cups of alcohol can move abroad, uh, mostly anything can.
Oh, that's great. I love that. And thank you for that. Thank you for that example. So now let's say that a company's contemplating exporting, and let's say they have this large potential order, large for them. Say it's a $5 million company, annual revenues, and suddenly they have this foreign customer that wants to buy $2 million worth of goods. So they have the insurance policy through XM, so they're comfortable with the receivable, but they have one other problem,
Mm.
right? They have to pay for the materials from their supplier, and they maybe don't have enough working capital to do that. And maybe they're in a spot where, a traditional bank loan or line of credit, they're maybe what you'd call not bankable. What happens then? Does the whole process just fall apart? They've got the credit insurance, but they don't have the cash to buy the goods. What happens then?
Yeah, that's really the second big problem in international trade. So the US banking system in general is challenging to help US companies fill export orders. And what I mean by that is, you got to, in your example, a $5 million revenue company, it can even be bigger than that. It could be 20, 30, 40. The problem with a lot of US companies is when their foreign sales start to get significant and they go to the bank and say, "Hey, I need a line of credit, not just for my domestic business, I need it for my international too." There becomes a problem in the banking system. There's this view that it's high risk.
Mhm.
And as bankers tend to be more conservative and shy away from risk. So, most times US companies have problems getting the money they need to fill these export purchase orders. So government gets involved, Exim gets involved, and SBA also has a product similar to the Exim Bank. It varies according to the banker who wants to use the product, but the idea behind it is we become a guarantor of repayment to the lender. So in your example, $5 million a year company, $2 million foreign sale that we're going to insure. They walk that over to the bank and they say, "Hey, I got insurance on the receivable. Great. It's a $2 million deal. Now I need, $1 million or whatever as a line of credit to build all this stuff or go out and buy it." The bank will say, "Okay, where's it going? Oh, it's leaving the country. I can't help you." But when you come back with a US purchase order, then we can get serious in our
Mhm.
talks.
Mhm.
So the company is stranded and they can't get the money, the capital they need to fill these orders with working capital. So we get involved and we say, "Hey, if they're presenting financial statements and the financial statements merit the ability to borrow what they're asking for, a million, whatever it is, and you're only saying no because it's an export, go ahead and give them the money that they need, that they're asking for, again, as long as it meets the credit standards, and we'll co-sign. We become a repayment guarantor to that line of credit so they can have access to the money that they need to fill these foreign buyer purchase orders. So guarantees and insurance is really kind of what we're about here at EXIM Bank, to enable this cross-border trade on the finance piece. Now, with that line of credit that we guarantee, they could also use it to issue bid bonds or performance bonds or standby letters of credit. Because another problem in our banking system is when a exporter bids on a foreign tender, that tender sometimes will say, hey, if you want to bid on this, you got to put up a performance bond or a bid bond. And that kind of weeds out the non-serious suppliers versus the serious.
I
And
see.
and when they want to supply that bid bond and they go to the bank will say, put the equivalent amount of cash in your account, I'll escrow it and then issue the bond. And then the exporter, has this confused look and, well, I don't want to pay for my own deal and block my own cash. So under the EXIM line of credit, you can actually use borrowed money to issue those bid bonds, performance bonds, standby LCs at a reduced cash collateral. So you're not tying up your cash.
Interesting. And
Mhm.
what's the typical, I think the term, like if you're factoring an invoice, it's called, I think it's called like the advance rate, like what percentage you could borrow, like on the, the purchase order or the invoice that you create. What's that percentage, through the
Yep.
XM financing?
So we put it into two categories, pre-export and post-export.
Okay.
The pre-export is the working capital, right? The inventory, work in process, finished goods. So under that, you could borrow a 75% advance rate. And then post-export, once it becomes a receivable, you could borrow 90. So it's
Wow.
pretty generous, advance rates. And typically it helps exporters fill these purchase orders much easier if we weren't involved.
Yeah, because I think I was a CFO of a company many years ago, and we were growing rapidly and we're using factoring.
Mm.
And it seems like the advance rate we were able to get on the factoring for domestic sales, let alone international, was only like 70 or 80%. And even I think I'm told that even if a company has a line of credit that they're backing with inventory and domestic receivables, that still a typical kind of advance rate is really only like I think about 80%. And so you're talking about an even higher advance rate, if I'm using the correct term, than what a traditional bank would provide to a traditional bankable customer for a domestic sale. Is that accurate based on your
Very
knowledge?
accurate. Yeah, very accurate. And sometimes, I go back to the example of US banks don't like export orders, and they don't. But sometimes they will give, an advance. If they've got a traditional line of credit set up for domestic, they may say, we'll let you borrow 10, 20, 30% advance rate on the export stuff. And with our
Sure.
guarantee, we can expand that to 75 up to 90. So it could be that we expand the borrowing base or just let alone get them access to it for export orders with our guarantee.
Okay. Yeah, this is really valuable. And I can't wait to get the word out to our contacts. So on the working capital piece, so how does that work then? Is the process that they call up their bank and say, hey, do you guys do anything with XM? And they just work purely through their banker? Or do they call you up and say, hey, we need some working capital. We don't really have a big banking relationship. Can you recommend somebody? Just help me understand kind of the logistics of it.
Absolutely. Yeah, it's a good question. We recommend starting with us. It's very easy to get lost in the banking system and trying to figure out who to talk to about getting the setup. A lot of time exporters will speak to their local relationship manager and they start talking about XM working capital, and they're like, who's XM? I don't even know what you're talking about. Slow down.
Right.
So it's more efficient to start with us. And if they're
Okay.
working with a bank that is in our lender network, we can go directly to the right person and connect them with the exporter to have those conversations. If they're working with a lender that is not inside our network, we can still locate a lender to set up kind of a XM specific line of credit if that's something they want to pursue.
Okay. Okay. Now this is really this is really valuable. Um, does does the bank have any other service lines besides the foreign receivables, insurance, and the working capital?
We've got a couple others. One of them is called foreign buyer finance.
Okay.
So this is a real interesting one. This is when a U.S. company is selling capital equipment to a foreign buyer. And when that capital equipment, quotation gets to the foreign buyer, what we see often is they'll go to their bank. In some of these emerging markets, developing countries, the buyer will go to the bank and say, okay, I got a quotation for, let's say, John Deere equipment, ag equipment, or Caterpillar construction equipment, or mining equipment, whatever. They go to their bank and they say, I need to borrow to pay the U.S. company for the equipment. And when they get a term sheet from their local bank, if you're familiar with international business and international finance, the cost can be much, much higher than what we're used to paying in the U.S.
As far as
Double
cost of capital, much
cost of
higher.
capital. It could
Okay.
double, and I've seen even triple and quadruple in some of these developing markets.
Wow. Okay.
And then the buyer, the deal falls to the wayside because the buyer can't afford to pay the bank um, all this cost associated with the capital. So in situations like that, in kind of high cost capital markets, we can get involved and find a lender. As long as we've got good audited financial statements and they meet credit standards, we can find a lender to give that foreign buyer a term loan, a 3 to 7 year term loan, of which we guarantee repayment of to the lender to buy that US made capital equipment. So in simple terms, we can finance a foreign buyer when the foreign buyer is buying US made equipment. And what we have found is the US companies that really know this product inside and out use that as a competitive advantage. They're saying, hey,
Sure.
on one hand, here's my quotation for the equipment. And then on the other hand, I can get you finance if you need it. And the companies that do that well, I mean, their sales, shoot through the roof because now they become, this finance facilitator for foreign buyers to access cheaper capital, which we've even seen companies where, maybe they're 10% higher on the bid than some of the other countries, but they're saving them 15% on the finance.
Yeah, I
So
could
it's
see
it's a
that.
net win.
Yeah, I could see that. That's really clever. I was familiar with the first two pieces, but I really was not familiar with that. I mean, yeah, that's a real competitive advantage. I mean, it makes you wonder how, a company in, I don't know, pick your country, Brazil, that, is trying to compete. Like, how do they compete when they can't? I'm guessing that they probably don't have the same type of capability to offer, these, you know, more attractive financing rates.
So yeah, that's a great point. XM Bank, we're also referred as an export credit agency, ECA. So every developed country in the world has the equivalent of us. Out of, let's say, roughly 200 countries, there's 120 of us representing the nation of each
Okay.
country. So what we know is, as it relates to international business, there are, when there's foreign competition in a tender, sometimes that foreign competition knows about their local ECA also, right? So they could be offering the same thing. Hey, I can get you, finance through my local ECA, name a country. So we
Mhm.
want companies in the US to be aware of how we can help them and support them, just like other, member countries of partner ECAs do. because it's a competitive advantage. And if they're not aware of it, it's a loss really for the exporter. And I mentioned
Mhm.
4 products. So we went over export credit insurance, the working capital, getting the foreign buyer a loan. And then the fourth one, it came out about a year and a half ago. It's a new product that we're super excited about. And it's really domestic project finance where there's an export nexus. And what I mean by that,
Okay.
David, is let's take an industry. Let's take LNG. When an LNG, natural gas, when liquid natural gas projects in wherever, let's call it Texas, when they go live, and you've got a solid entity set up for the purpose of building an LNG plant, and maybe there's corporate shareholders, maybe there's individual share, whatever it may be. When banks take a look at this and they see that it's a domestic project finance structure, meaning the offtake of any kind of contract will repay the loan. Bankers don't like that. Bankers don't like project finance. And
Sure.
if we look at a project where there's an export nexus, and what we define as an export nexus is 25% of the sales will be exported,
Okay.
we could potentially be a lender or a loan guarantor to that domestic project, as long as there's going to be 25% foreign sales, and we could go down to 15% if it's a small business. So we can
Wow,
involve.
that's really cool. Yeah, because I
Yeah,
mentioned the bank is going to say, yeah, sounds like a great investment or a great opportunity. Go find some investors to fund this. And then once you start exporting the LNG, give us a call. We'll give you some working capital and you'll work with EXIM to ensure the receivables. But until then, hey, it's on you.
that's it. That's the problem. That's where a lot of these projects get stuck in the banking system
Mhm.
as it relates to traditional banking. They can't get the money they need to lift this project up, and it could be a great project. But yeah, banks like to see history, right? I want to see your balance sheet, income statement, cash flow the last 3 years. Let me underwrite it. Well, there is none. It's a new project, and we're building it. Well, we can't help you. Go find some investors, and that's typically the conversations.
Mhm.
So instead of these deals disappearing, as long as there's solid offtake agreements, we can look at that potentially to repay the loan, and we do that on the foreign buyer side too. Uh,
Okay.
yeah,
Yeah, and to be fair to the bankers, I know many bankers and have great relationships. If a bank is paying 5% for a deposit and they're lending it out at say 8%, by the time they pay their fees and stuff, they really don't have a lot of margin left.
right.
So they have an imputed default rate, that they can tolerate of like 0.5%, right? Maybe 1%, right? I mean, that's just their model.
Margins are
And
thin. You're right.
yeah, and they're
Yeah.
probably even I'm guessing even prohibited from saying, okay, yeah, we'll finance this deal for you, but this is high risk, so instead of a 7% loan, it's going to be 30%. I mean, the banks probably aren't even allowed to do, there's probably usury laws or something. Uh, am I correct in that understanding? That
Yeah.
even if
Yeah. Yeah. So they would definitely view the risk differently as a domestic project finance, but I would say even more so, the regulatory uh, issues involving domestic project finance probably prohibit the lenders from doing that even more
Oh,
so,
yeah.
because
Yeah, right.
there's
That's right. I never thought about that.
there's definitely some challenges in that space, and
Yeah,
you
and that
know
makes sense because really from a holistic perspective, you would say, hey, bank, this isn't your sweet spot. This is like venture capital, risk capital, let them find, a lender, like a hard asset lender that'll, charge a much higher rate or let them raise equity capital to finance this. That like this isn't what you're designed for, Mr. First National Bank.
exactly right.
Okay. What are some of the limits, kind of minimum maximums for these different products? Like, let's start with the credit insurance. Is there a minimum size like that you all have? I mean, I'm guessing if somebody has $100 foreign receivable that they want to insure, probably doesn't really make sense for everybody. So is there a minimum size? Is it a hard minimum or kind of a soft minimum?
Yeah, that's a great question. So we don't have a minimum per se, documented minimum, but yeah, it's got to make sense, right, to go through the process. Um, so I mean, we've insured receivables as low as a couple $1,000.
Okay,
Um, so that's for credit insurance. For working
right,
capital, we also don't have a minimum, but that's set by the lender. So we say,
okay,
hey, as long as the lender will do the loan, we'll take a look at the guarantee. And most lenders that we have spoken to, we probably would say that the minimum with most lenders is around a 500,000 for a
okay,
working capital line of credit.
yep,
And then on the foreign buyer side, um, again, it's got to make sense to the lender. We don't have a minimum. Most lenders, I would say the minimum I've seen where a US lender would give a loan to a foreign buyer is also around a 500,000.
okay,
Maximum, no maximum, but anything above 25 million has to go to our board. The
okay. And
largest
is,
we did in the bank's history was in Mozambique for an LNG facility was 5 billion.
oh, wow. And then, are there limits on the working capital and credit insurance, similar limits that require board approval?
Anything above 25. Yep,
It's the same 25 number.
correct. Which it's not prohibitive, it just adds another layer to the
Yeah,
process.
yeah. Yeah, and even again, even if XM wasn't involved, I know a lot of banks just, when loans get above a certain amount, they want to syndicate them with other banks just
Exactly.
for their own risk. And I think a lot of times those syndication amounts for a medium-sized bank will start in that 10 to $25 million, as I understand it. And then what about the domestic projects that have 25% export expectations? Any minimum or maximums there that you've seen?
So I would say, there's no hard set minimum, but the soft minimum I'm seeing is probably 5 million plus. And the reason for that is the SBA, the Small Business Administration, also a federal government agency. They have similar products that go up to 5. So this will take it past 5. And we don't want to compete with another government agency. So, it's 5 below. SBA might be a better fit. 5 above, we're probably the only game in town.
Okay. 0 to 5. I'm taking some notes on this. 5 plus XM. Okay. One of the other interesting things is we've had this conversation that if you think people have never heard of XM, they're even, I think, less likely to have heard of the IC disc program,
Yeah,
what we
for sure.
specialize in. And what's interesting is the number of parallels. I mean, the thing that
Mm.
I can't, that blows me away is how logical everything is with XM. Like, there's there's a perhaps a belief that some government programs, agencies, that there's no real logic to it. It was some negotiation in Congress and they had just some arbitrary rules. But as I kind of look at these, it just all seems very logical, right? Like, above a certain amount, you need board approval. Again, just like at a bank, right? When they're doing a $25 million loan, it's probably got to go to, loan review committee or something. But the other thing is there's some similarities between XM and the IC disc, and one of them is the 51% US content. Can you explain how that works with XM? Because I think it's pretty much the same as IC disc.
To my knowledge, it is also. Yeah, so it goes back to really the mission, right? Creating jobs through US exports. And we want to stimulate US manufacturing. So we can't support a trade where, Houston companies buying from China and sending it down to, name a country in South America.
Right,
There's no value add for the country. So
right.
Congress basically put a policy to the agency that says anything that we support has to be greater than 50% US content. So another way of saying it's just 51%, right?
Yeah,
Majority of the product has to be US content. And the way that we calculate that is we look at the cost. So if they're selling, a widget that they sell for $100, but it costs 70, we're going to look at the 70 and say $36 of that 70 needs to be US content.
mhm, mhm.
So that's really, we look at the cost, and the majority of the cost needs to be US made, whether it's products.
Yeah, or another way of saying it is no more than $36 can be foreign
Correct.
cost.
You
Yep,
got it.
yep, that makes sense. Um, wow,
And
this
if it's
is
a service, by the way,
go
because
ahead.
sometimes we get these service questions where, hey, I'm an engineering company designing, a refinery plant for a foreign buyer. How do I look at that as far as US content? So what we do is we say, okay, start with your invoice, right? Whatever you're billing out, if it says engineering services or CAD drawings or whatever, take that and then look at the cost, and greater than 50% needs to be US citizens or green card holders as part of that
Okay.
cost for services. So we basically look at the citizenship of the provider for evaluating US content and the cost.
Yeah, and that's somewhat similar to the IC disc. The IC disc really only includes two types of services that are eligible: engineering services and architectural services
Hmm.
for foreign construction projects, or services that are an integral part of the sale. Like if you sell a product for $1 million and there's a $200,000 installation service, as long as that's an integral part of the project, that qualifies, that service does. But yeah, that's interesting. Um, so so let's say somebody says, "Yeah, Eric, I really like the sound of this, and I'd like to talk to you, but I just feel like you're probably a lifelong government employee. You probably went to work right out of college. You don't know what it's like to sit in my shoes. You don't know what it's like to have been on the private side, having these foreign customers. What would you say to them?"
Yeah, so being a government employee is new to me also.
Oh,
Yeah.
okay.
So after college, I started at a company and worked there for a decade, grew into sweat equity. I was a part minority shareholder, and I was a customer of EXIM Bank for 10 years. So
Oh, really?
yeah, we were a company that exported capital equipment all over the world, but with a concentration in sub-Saharan Africa.
Okay.
And we grew rapidly with the help of EXIM Bank. We used all the products, the credit insurance, the working capital, getting the foreign buyer a loan. And that really became a competitive advantage to the company because, we looked at ourselves saying, hey, we're an equipment supplier, but so is the other hundreds of companies around there, if not thousands of companies around there.
Uh-huh.
Now, how
Uh-huh.
do we make ourselves different? And the finance became very important to that conversation because, you can Google search equipment companies in the US and you're going through
Yeah.
thousands of pages trying to find an equipment supplier, but not everybody is saying, hey, we have financial solutions too if you need them. We
Mhm.
can get you a loan. We can sell to you an open account with our insurance. We can get the capital we need to fill these export purchase orders. We can get the line of credit that we need to send bid bonds and performance bonds to some of these large tenders. So going back to your question, I've been at EXIM for 7 years, but the majority of my career was in the private sector, and being a minority shareholder of a company that used the bank that I work for now to grow a small business
What a
rapidly.
great story. Like, it would seem like you have the perfect background for your role. I mean, you were actually a customer. So the private companies that you're trying to help, you really do understand what it's like to be in their shoes.
I think most employees that work here at EXIM I found were very service oriented. We like to help. We like to help.
Mhm.
It's fun
Mhm.
for us to help. It's fun for me to help. The best part of my day is meeting small business exporters, helping them become aware of all the resources that are available to them to become more competitive and grow like we did when I was
Mhm.
with that company.
Yeah, it's just amazing how similar our days are. That's also the favorite part of my job is when I get a phone call from somebody and they say, hey, Bob said I should call you. Our exports have really grown a lot, and there's this thing called IC disc, and you know, tell us about it. Are we the right fit? And it's great to be able to help them. Oh, I was just going to ask you something. What about indirect exports?
Hmm,
Do they qualify under any of the
great question.
programs?
Yeah, so under the working capital, it does. So if
Okay.
you have an exporter that's selling to, name a major company, let's say a major oil and gas company, who in turn
Yeah.
is exporting that out, we call that an indirect export. That does qualify them to get the capital they need to fill that order.
Yep. Another parallel with the IC disc. The IC disc is the
Mm.
same way. Yeah, most of our clients are actually indirect exporters. So
Oh,
some of the products would not be as beneficial, like the credit insurance, for example, because they don't have any foreign receivables. But they still may have use for some of the other products. Okay, so I've got just a couple more questions. Well, first off, is there anything we didn't cover that you wish I had?
I would say there's other government resources that every exporter should know.
Okay,
One of
what
them
are
is the
those?
yeah. So one of them is the U.S. Commercial Services. They're a part of the Department of Commerce, and they've got an office in every major city in the U.S. I think there's 100, if I remember right, 100 U.S. Commercial Service offices scattered
Okay.
throughout the U.S. If you're in Houston, there's one in Houston. Great folks. We work with them closely. They've got some really good products as well for exporters. One of them is called the Gold Key, and the Gold
Okay.
Key uh, it basically connects buyer and seller. So
Okay.
once the agency understands the company, they met with them, they understand the company, they understand what they're selling. They have to be what's called export ready. So an existing business that's already selling. Let's say they're successful here domestically and they want to export, let's say to our closest neighbors first, Canada and Mexico. But they're like, hey, I don't, how do I even do that? How do I find a buyer? How do I find a distributor in these countries? That's really the first step in kind of the maze of exporting is first you have to have a buyer. We're kind of second to that, right? Once you have a buyer, then it's money talks and then we get involved. But
Mm-hmm.
even before us, the commercial services can get involved. And under the Gold Key, they can find distributors, partners, buyers in foreign markets.
Wow.
Yeah, under the Gold Key. So they basically, once they understand the business, they work with the embassy in that country and say, hey, I've got, Bob here. Here's his company, been around for 10 years, successful in the US, but they want to start with Mexico. And can you find them buyers? Can you find them distributors? And they try to play matchmaker. So they generate a list and they recommend going to the country that you want to export to, shake hands, stare them in the face, sit down with them physically, because that's another important thing in international business. You can't just stay behind the phone or email. You
Mm-hmm.
really have to go to these places.
Wow. So that's amazing. Now, the bad news, Eric, is um, you and XM may have just dropped to number two as far as my favorite government agency. I mean, depending on where a company is, that might be even more valuable, right? Because without the customers, they don't even need, the other products of XM. That's really cool.
That's right. Yeah. I mean, they need a buyer before they come to XM, and they need a foreign buyer, and commercial services can help with that.
So be
Yeah,
careful. You're about to list some other agencies. It may further knock you down on the priority list. So be careful there.
that's okay. We're here to help. So, another problem with small business is, I'm selling domestically, I'm successful, maybe I'm running on thin margins. I don't have the capital that I need to go into all these countries and spend all this money and cross my fingers that I get business. And I just don't want to spend that kind of money and risk that kind of money because I need to keep my lights on and pay employees first. So there's something called the STEP grant, STEP grant, STEP
Okay.
grant. It stands for Statewide Trade Export Promotion.
Okay.
So most states participate in it. It's federal money given to the states, who in turn give grant money to companies who are looking to export. And they can use that grant money for travel, um, hotel stay, airfare. They want to do website translation on their website from, English
Hmm.
to Mandarin and Spanish to, capture half the world. They want to, you know, create, print flyers, any kind of marketing collateral that will aid them in promoting their company to foreign buyers. This is a reimbursable grant, which means you apply for it. You could say, hey, I want to go to Mexico. My airfare is going to cost this. My hotel is going to cost this. The conference in Mexico is going to cost this. And all together, it's going to be $10,000.
Okay.
So you apply for it. And then once approved, you can get up to 75% of that back.
Oh,
So
wow. You have
you
to
apply
actually
for
spend
it,
the money first,
you got to spend
and then they
that's the key thing there. You got to spend the money, but you got to get it approved. Once it's
right.
approved, then you spend the money and then you come back and give them your receipts and
Wow,
you get
that's
75% back.
pretty cool. Does that fall under one of the federal agencies? Is that kind of the ultimate umbrella, or is it really more of a state by state program?
In Texas, the Department of Ag is administering the fund.
Okay.
And I think it does vary state by state on who holds the money and approves it and disperses the money. And if it,
Okay.
I may be wrong, but I think it goes up to $10,000. It's either 7,500 or 10,000 max amount that can be approved. And you
Okay.
can apply every year. Some companies do that.
Okay. And what else? Are there some other?
The SBA, Small Business Administration.
Sure.
Most people know them for domestic business, but they also have an export arm called the OIT, which is Office of International Trade.
Okay.
So they have export finance products just like we do. Um, they're not competitive to one another. They're slightly different in various aspects, but they can get you working capital, usually for smaller loans,
Hmm.
or they can get you something called an international trade loan. And what that is used for is like, hey, I need to buy some capital equipment to go into my factory, and it's going to cost $1 million, and it's going to generate export sales. That kind of finance structure.
Hmm. Is it the structure kind of the same, or does the borrower have to put up a bigger percentage, or do you know?
For the international trade loan, I think it's similar. They guarantee the lender just like we guarantee the lender.
Okay.
Uh, and lenders, we like to say the lender makes the decision because our guarantees are slightly different than one another. So some lenders will say, "Hey, I'm more comfortable with EXIM," or "Hey, I'm more comfortable with the SBA," or "Hey, this is above 5 million. The only one you could do is EXIM Bank." So it's really up to the lender to evaluate the guarantee and what fits them best.
Well, that is awesome. Any other government agencies that you tend to work with regularly?
Those are the big ones. We
Okay.
seem to always be in the same circles, the SBA, the commercial services, and ourselves in the same circles, promoting as much as we can to our communities.
That's awesome. Well, this has been so informative. Um, I really appreciate the time. I just have two more questions, and they're really kind of fun ones. Okay.
Sure.
So the first one is, if you could go back in time and give advice to yourself, like right when you were graduating college, what advice might you give to yourself? With the benefit of hindsight, if you kind of go back in time, what advice might you give to yourself? Things to do
Mm,
instead or do sooner, or what comes to
no,
mind?
that's a really good question. Going back in time, I would say for the company that I worked for and some of the things that I don't like to say did wrong, but if we could repeat it and how we would do it differently. When the business grows, and we grew fast, our operational costs also grew fast. And I
Mhm.
think if we were better controlling the operational cost, when there was a dip in revenue, there wouldn't be so much growing pains or
Mm.
slowing pains. I think getting a better grasp operationally on a business when it's going through the growth phase is key to its long-term success, because a business is not always going to accelerate up, 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 up. There's going to be peaks and valleys, and as long as you
Sure.
manage the operational cost of the company, um, it can get through. Look at COVID, right?
Yeah,
Nobody predicted that. Look how many businesses went through all kinds of painful
yeah.
experiences. So that, going back in time, just from a business standpoint, I think that would have been uh, super helpful in our judgment and assessment of looking towards the future.
Okay, I really like that. Well, we just have one left, and this one's even more fun. Don't think about this. I just want us kind of a snap answer, okay? So you're a native Texan, right?
Yes,
Native
sir.
Houstonian, Tex-Mex, or barbecue?
Oh, I gotta go with Tex-Mex. I love
Yeah,
barbecue, but the chips and queso and salsa and guacamole, I don't
yeah,
think anything competes with that.
yeah. I asked this question of all my guests, and I had two answers that were interesting. One answer was if I know that the food is going to be average, I absolutely would take the Tex-Mex
Hmm.
because Tex-Mex has more tolerance for averageness. Okay. They said, but if it's going to be world class, then they would take the barbecue. But they don't want mediocre, tough, dried out brisket. Okay. So I'm like, well, that's a good one. And then I had a guest telling me about I forget the name of the place, but it was a place that had like brisket tacos or brisket enchiladas, and they basically
Mm.
said both. They'll take both.
There you go.
So
I like
yeah,
that.
yeah, I am with you. If people want to get a hold of you, what's the best way to reach out? I know you're on LinkedIn. Are you very active on LinkedIn?
Not super active on LinkedIn,
Yeah.
but I'm very, very accessible. Cell phone, email, office phone. You
Okay.
can always get a hold of me.
What's the email address?
So Eric, ERIC, dot Miller, MILLER, at xmexim.gov, G-O-V. So Eric
Okay.
dot Miller at xm.gov. Yep.
And if they want to just call you, what's the best number to reach you at?
713
Uh-huh.
306 7969.
7969. Awesome. Well, Eric, thank you so much for taking the time to come on here. This may be the most information dense episode I've ever done for an exporter. Usually it seems like we've got one or two good nuggets, but we may have a dozen takeaways. So thank you so much for making time out of your day. And this has really been fun. And don't be surprised when this goes live if you don't have a few folks reaching out to you.
I look forward to it. Thanks for having me. It's been an honor.
Yeah, thank you.